Today I'm meeting with Rayan Arifdin from C2M Chartered Accountants to run us through the cost, benefits and considerations of running a company. Let's start with the biggest question entrepreneurs have. Why register a company instead of just trading as a sole proprietor? What are the biggest benefits?
So before answering your question, Justin, I think it's important that we just touch on the basic difference between a sole proprietor and a company. So with a sole proprietor, there is effectively no legal distinction between a business owner and the business itself. And because there's no legal distinction between the two, the debts and obligations of a business effectively falls on the business owner in his personal capacity. With a company, however, a company is a separately legally registered entity with the CIPC. And so there is a legal distinction between the company and the business owner itself. And so the company itself is liable for the business debts and the obligations of the business. And then there's also obviously some tax aspects that needs to be taken into account with the sole prop and with the company. Now that being said, I think that speaks for itself in terms of one of the main benefits of actually having a business or having a company, if you will, in that there is a limited liability aspect that one needs to consider when you are registering a company. Needless to say, in today's business landscape, while there is a limited liability aspect that one needs to consider, banks do however ask business owners to sign cross-sureties on behalf of the business, but that's a discussion obviously that you would have with your bank at that point in time. The other benefits that one needs to take into consideration is your tax aspects. Now, without delving or going too far down the rabbit hole, is with a sole prop, you are taxed in your personal capacity on the profits that's generated by your business. Whereas when you do have a company is taxed in its own right as a separate legal entity, and those tax rates that apply would be your corporate tax rates, which are taxed at 27% in most instances. Again, there are other aspects that one needs to consider when you're considering your small business corporate tax rates, your micro business tax rates, but those are aspects that one needs to consider holistically when looking at your business and making that decision. Other benefits that one needs to consider is if you are trading as a sole prop and you are wanting to take on debt or take on a potential business partner, you are limited in terms of issuing equity in your business. A sole prop, you are trading effectively in your own capacity. So you're not able to issue shares. Whereas with a business, you're able to raise equity by issuing shares in your business. And I believe that banks also look more favorably on a registered business as opposed to individuals that's trading in their personal capacity.
Now, with these benefits, I assume there would be some costs associated with them. Can you talk me through the initial setup costs and some cost for maintaining a company?
Yeah. So your costs for registering a business are if you have the technical skills, the know-how and the time, if you will, it's minimal. The costs associated are obviously that relevant to the SIPC, to the Companies and Intellectual Property Commission. And the registration in that instance is, if memory serves, it's about 125 Rand to actually register a company. So the cost is minimal. There's a cost associated with the name registration of the business as well. But as with most business people, it's more a question of whether you have the time and whether you have the knowledge to actually go about registering the business. Needless to say, if you don't have the time, you should seek the advice of either an attorney or an accountant to help you with that process. And in that instance, obviously, you need to cater for the additional costs that's going to be charged for the professional service that's going to be provided to you. With regards to the ongoing costs, your ongoing costs is going to be dependent from business to business. Again, if we're looking at your ongoing costs, one is to look at your annual SIPC annual returns. And again, the cost is going to be dependent on, for example, your turnover. That determines your annual return fee that's payable. And those fees can range from 100 Rand up to 4,000 Rand. And again, you are able to submit it yourself. If, however, you're seeking the assistance of a professional, then you need to cater for those extra costs. Other compliance issues that you need to consider, obviously, if you're registered for VAT, if you have voluntarily registered because you've exceeded the 50,000 Rand threshold, or whether you are compulsory registered in the sense that you have exceeded the 1 million Rand threshold, you need to become VAT registered. And so you need to actually do your monthly submissions of your VAT returns. You need to obviously ensure that if you have employees in the business, you need to register for pay as you earn and UIF. And so those are all services that's going to be required either in-house by you as a business, or if you haven't grown to the size where you actually require somebody on a full-time basis, you could seek the assistance again of an accountant to do that on an ad hoc basis, in which case it would normally be billed on a time spent basis and charged out accordingly. Other aspects is, again, your annual income tax return, which needs to be submitted. And again, if you have the technical skills and the ability to do these things yourself, you obviously can save yourself on those costs. But if not, then you need to make provision for the professional fees that's going to be charged by your accountant for the submission, or firstly for the calculation and then the submission of those returns.
So one of the biggest factors that business owners consider when setting up a company is the tax effect. Now, at what point should a sole proprietor consider registering a company?
So there's no hard and fast answer to your question, Justin. There's no one size fits all. One needs to look at the business of each individual holistically before making that decision. And I suppose you're going to have to go back and again do an assessment in terms of how a sole proprietor is taxed and how a company is taxed, if you will. So as we mentioned earlier on, is a sole proprietor is taxed in your personal capacity, which means that you are taxed at a sliding scale, and that sliding scale ranges from 18% to 45%. Whereas with a company, you are taxed at a flat rate in most instances of 27%, but there are other aspects to take into account from a corporate tax perspective, in that you could register as a small business corporation if you meet the necessary criteria to be classified as a small business corporation, or you could register as a micro business if you meet the criteria to register as a micro business. So my opinion would be that you actually seek professional advice in terms of when the right point is for you to make that shift from a sole proprietor to a company, if you will, because there's many aspects to consider before making that decision. And you're going to have to look at your turnover in that regard. You're going to have to look at how big your business is, the amount of employees you have in your business, and then ultimately also you want to give some consideration to your long-term goals of the business. Is it your intention ultimately to bring in new partners into the business? When do you actually want to bring those new partners into business? Is it now? Is it at a later stage where you felt you've grown your business to the extent where you can actually ask for more value from a new partner entering your business? There is no hard and fast rules. There is no specific point in time where you make the decision to shift. It's about having that discussion with a professional, taking the correct advice given the circumstances of your business, and then making the decision about when to do that move away from a sole prop to a company.
In my experience, I've seen a lot of clients get very excited by this prospect of opening a business and starting a business, but they do quite often overlook the compliance requirements associated with it. What would you say are a few compliance requirements in your experience that clients overlook the most?
So I think that's actually a very important question, Justin. I think over the last 2 to 3 years, compliance has become a very big issue in South Africa, and it's becoming a lot more onerous. Even if we just take the grey listing into account, that's happened recently. So from a compliance aspect, it is very important that obviously a company remains compliant from a tax perspective. And as we mentioned earlier on, there's a lot of aspects that needs to be considered when we're looking at compliance from a tax perspective. There's a VAT compliance issue. There's an income tax compliance issue. There's a pay-as-you-earn compliance issue. And if you are not compliant with all of those taxes, if you will, there are penalties that are imposed that's going to cost the business owner at the end of the day. If you're late with VAT submissions, as an example, and you need to pay, there's a 10% penalty that's going to be levied on you. And so with other taxes as well, if we were to use another example, if we're talking about provisional taxes, there are underestimation penalties that would be applicable in instances where you've not handled in the correct manner. So compliance from an Income Tax Act is a big issue. And I think often business owners neglect those compliance issues because they are so invested in growing their business. And that's one of the things that we've seen is that there's a big difference between being an entrepreneur and running a good compliant business. And at the end of the day, that's what we're here for, is to assist your business owner to remain compliant, freeing the entrepreneur up to actually grow his business. The other aspects that one obviously also needs to consider is the Labour Relations Act. You know, employing people in your business. There is a big compliance issue with regards to making sure that your employees are covered, if you will, and treated fairly under the Labour Relations Act of South Africa. Yes, South Africa is a compliance minefield, and there are different professionals that you need to sort out and seek and have the discussions with to make sure that your business is compliant in all aspects. Because if you don't, at the end of the day, it's going to cost you money. It's going to end up in potential legal issues, and that's the last place where you want to be when you're trying to grow a new business.
So now that we've touched on compliance, I want to know, in your experience, what are some of the other mistakes that you see business owners make when actually registering a business?
I'd say the biggest mistake, individuals don't give enough thought to how they structure their business. And when I say structure their business is, again, there are many ways to own your equity and your shares in a business. You can own your shares via a trust. You can own your shares via another business. You can own your shares in your personal capacity. And each structure has got its own benefits and its own disadvantages. So ultimately is that you have to sit down at the end of the day with a professional and outline what your needs are, your long-term needs are for your business. And nobody wants to obviously pay more tax than what they need to, but that's a discussion that you need to have, because at the end of the day, the structure of your business also determines what benefits you can get from an income tax perspective. Again, we spoke about small business corporations earlier and micro business corporations. The structure of your business also impacts on how the tax is handled for the business. So I think that's a very important discussion. You know, having that discussion right at the beginning and making the decision about how to structure your business is important, because doing it at a much later stage could also have negative tax consequences for you as a business owner. Compliance again. Compliance is a massive issue for a business owner. Registering your company is onerous at the end of the day, because it is ultimately, it's your responsibility as a shareholder and a director of the business to make sure that your business is compliant from all aspects. I'd say those are the two biggest issues that a business owner needs to consider when registering a business is your structure. Your structure is important, and your compliance is how much time do you spend on compliance of your business, or should you consider actually seeking out a professional to assist you to make sure that the business is compliant while you spend your time in growing your business at the end of the day.
So I want to put this into the perspective of a real world scenario. Do you have an example of a client you've worked with? You don't have to name names or anything, but where changing from sole proprietor to a company had a huge advantage for them?
If your business grows to the extent where it's no longer tax advantageous to continue trading as a sole proprietor. In other words, is you have now reached the point where you are in the maximum tax bracket and you are now being taxed at a 45% rate. It's no longer advantageous to continue trading as a sole proprietor. So without mentioning names, there's also a lot of other considerations which I don't think we have enough time to discuss today in terms of structuring your business to the point where you are able to maximize the tax benefits, not only taking into account income tax, but also taking into account things such as dividends tax, for example, where we've been able to structure a client's business where he's moved away from a sole proprietor, but then we've structured his shareholding, if you will, to the point where we've taken into account not only income tax, but also things such as estate duty, longevity of your business, all of those factors, and also how to build up wealth for yourself, but outside of your personal capacity. So it's difficult for me to say to you, this is exactly what we did, because at the end of the day, we're going to be sitting here for another 30, 40 minutes, and I might go too in-depth on details such as that. But moving away from a sole proprietor needs to be considered again once your business has gained enough traction and you are seeing the fruits and of your labor that you've invested into the business. Where and when that point is, I think that's a continuous discussion that you have with the professional at the end of the day to say, so now is the opportunity. And then consider all the factors that we discussed earlier on with regards to how to structure it, what you want out of your business, what's your longevity, what's your long-term plan of your business. Are we looking for equity partners in the business? Are you going to be taking on debt in your business? And also, all of those points is, do you ultimately want to expose your personal assets for business debts? At the end of the day, that's a big consideration. If you have a family, if you've built up wealth, you never actually want to expose all of those assets to business risks. If you can keep those two separate, you should keep those two separate.
So to wrap things up, what would be the last insight you want to give through to our audience where there's people that they are considering to start a company, but they're not quite sure if it's the right move?
It's going to be a very general answer, unfortunately, because again, it's a question where there is no one size fits all question. So the most important, as a business owner myself, liability is a big and important thing for me, in that once you do begin building up wealth and you own those assets in your personal capacity, it's not something that you want to expose going forward into the future. It's important to create a separation between your business and yourself, and you can only do that in the form of registering a company or potentially giving consideration to trading in a trust if that's the route that you want to take. But that is the discussion that you would have at the end of the day with your professional, is when is the right time to make that move. Again, one has to give considerations to the tax impacts. Yes, there are certain benefits that you will have if your business is small enough and you want to continue trading as a sole proprietor. But you will reach that point where you need to move away from a sole proprietor, registering your business, and then making sure once again that you have the proper structure given your long-term plan for your business, given the potential to want to take on debt from a bank, given the potential to want to take on an equity partner and issue shares in the business. So you need to have a holistic plan about how you see the future of your business, how you want to create a separation between yourself and your business, and then make the decision with discussions with a professional, whether it's an accountant, an attorney, a chartered accountant, so that you make the right decision at the end of the day, at the right point in time.
Thank you very much, Rayan. So if I can put everything together, there's a few considerations that you need to take into account when considering moving from a sole proprietor to a company. Tax being one of them, the compliance requirements with setting up and running a company, and lastly, and very importantly, the estate planning benefits of growing wealth outside of your personal capacity. This can be done via holding shares in a company via trust. So stay tuned for more financial planning content.